Now talk us through the markets. Are foreigners still the biggest participants in today's session?
Yes, if you look at the volumes traded today, or the turnover that actually took place today, close to 52–53% was actually foreign turnover. And if you look at the trend even into the beginning of this month up to now, into March, January, February, you'll find foreigners have always been above the 50% mark. So in essence, they're really the ones propping up the market and providing the necessary liquidity, demand or supply as and when. But retailers and local institutions really are not participating in the market that much.
Now looking at a company out with results, Scan Group, Eleni will be having an interview with the CEO later on in the program. The company posted a jump in pre-tax profit of about 53%. It declared a dividend of 0.7 shillings, but that stock remained down in the session. Could you talk us through market reaction to those numbers?
Naturally, we expected people to have actually priced in these results for Scan Group. After buying Ogilvy and basically being a monopoly in the market, and basically they control close to 90% of the market. So the most of the advertising revenue actually goes to Scan Group. And you'll find, especially in the telecom space, who are the largest spenders when it comes to advertising, that space is now going more into advertising than actually on pricing, because on pricing they're now more regulated by the CCK. So they have been spending more. It's about who puts out the most interesting advert, who puts out the most advertising campaign. So the market had kind of expected the results. So when the results came in now, there was nothing motivating demand on the stock. It's now public information, no speculation anymore. So that's why the counter kind of softened today. But in essence, the fundamentals are still okay. They're still robust. They are in a good cash position, close to 2.43 billion shillings in liquidity, which is more than 20–25% of their revenues. So they're actually in a robust and strong business. And again, as you said, because we're getting into an election year, I'm not quite sure when the election is, but because of the pending election, again, we're expecting their revenues to be boosted because of civic education, political parties trying to get themselves known, and all the advertising that is going to come with the elections.
Now, talking about Kenya Airways, it's the last day of trading for non-shareholders to participate in that ongoing rights issue. Could you give us some sort of performance on that rights issue? We know that we have about a week and a half left for this rights issue.
If you talk to most stockbrokers, they're expecting activity to increase at the end, towards the end of the rights issue. As a fund manager, none of us want to tie our funds in there. On the shareholders of the company, participation has been not up to par. And as we saw, when the share price dropped, the rights issue price also drastically dropped. Then you reach a point where if you're a non-shareholder, it really doesn't make sense for you to go try and buy the rights, but you're not quite sure where they actually be allocated the rights. It would actually have been faster and better just to buy the share directly on the market. You're paying the same price, or if not, cheaper. There's a time it went to 13.95. If you had picked the stock at 18.95, you're actually in a better position than someone who's trying to buy the right to be able to buy the share at the same price. So that is what really affected non-shareholder participation, because it was going to be easier just to buy the shares of the counter and sell them at a profit, or buy it before at 13.95, 13.80 and sell it at 14.30 today or 14.40 tomorrow. So the participation there was a bit checkered because of that uncertainty of where the price actually going for the stock. And am I going to buy it at a premium because the share itself is trading below its rights price, which is supposed to be a discount of close to 30%.
Now, looking at the macroeconomy, Kenya's economy is estimated to grow by 4.5% in 2012. What are your forecasts on that front? 2011, pardon.
On 2011, our focus was basically 4%, the one we released in January. We don't expect the economy to actually grow by more than 4%. So 4.5%, it's a government. They have to be a bit optimistic. Their focus for 2012, though, is which we are, it's a bit optimistic at 5.2%. If you look at everything that is around or the pressures that are affecting the economy currently, you still have a lot of external cost push, inflationary pressures coming in from rising global oil prices, raising copper prices, raising sugar prices. And at the same time, prices of global tea and coffee are also dropping at the same time. So the economy is in a place where we are not that certain that it will actually grow by 5.2%. Even in Q1, we expect the economy to grow way lower than the 5.5% it grew on last quarter, 2011. We expect it to grow between 1 and 2% actually, because look at the frost that affected the agricultural sector. And the agricultural sector becomes pivotal to the rest of the economy because everything else feeds from that sector. Your third biggest sector is your manufacturing sector, which the largest component there is food processing. So naturally, we don't expect the economy to grow at 5.2%. It's a bit ambitious.